Hello everyone, we are on Thursday here, the 15th of October, and welcome to another edition of Bitcoin and Ethereum Elliott wave analysis. So it's been almost 2 weeks since we've done the last video, and let me just kind of start by looking at this at the Bitcoin chart and just start by looking at the moving averages really quick, and then I'll flip up to some candlestick charts and we'll get into the motive wave analysis as well for Bitcoin and Ethereum. I'll show you a long trade that we took, and then we'll just kind of wrap it up. So taking a look at the moving averages here, things are still encouraging in Bitcoin, right? We are pretty solidly above the 200-day moving average. We've crossed above the 20, we've crossed above the 50 as well. You have a small crossover in here. So overall, I mean, since the March lows, we're in a pretty clear uptrend, right? We're moving from the lower left side of the chart to the upper right. The move back here from 2019 back into 2020 was clearly a bearish move. In hindsight, you can kind of see it, right? And since then, we've recovered. Overall, if you take this past couple of years, we're still kind of sideways in the price of Bitcoin. But the moving averages continues to point higher. And, I would stick with this kind of bullish continuation until you have a reason not to. So for right now, all the reasons here are kind of continuing to point to the upside. So based on this moving averages, I'm still constructive on the market and looking higher. Now let's take a look at the candlestick as well. And massive rejections here from these lows in March. The price action was pretty volatile, since, let's say, middle of 2019 till the spring of 2020. And then you've had a nice recovery back in here. You can see a lot of bullish candles kind of coming from the lows, and then we kind of started to falter a little bit. We're continuing kind of here since the end of May to just have a pretty nice support through this trend line that I put at the bottom here to kind of give me an idea about where price action kind of stops. And we've been able to hold this thing pretty strongly so far. You've had a pretty big bearish candle here. I don't know what month it was. This maybe in the month of August, but this whole thing has been almost fully retraced. So it does look like more like a bearish kind of flag and a pullback here as part of a corrective pattern. But as I'm saying, sometimes if things are too obvious for everybody, that means that we could be wrong thinking that. So there's a big chance here that could be a big breakout coming. So just by kind of taking a look at the candles, and this is a weekly chart. The previous week was pretty bullish, and we're trying to get some traction during this week as well, but we're kind of slowing down. If I go to a one-day chart, you can also see in here that we're trying to push higher in here. I mean, we've done this this is the largest candle of a few days back, and since then the price action is kind of just holding within the body of this candle, within the open and the close, the high and the low of this candle. So we'll see what happens. Let me take a look at the wave counts in here and see where we are. So if I go back and I look at the wave count, so last time we've talked, which was a couple of weeks ago on Friday, it's pretty much where this red line was. And we've talked about, if you go and rewatch the video, we've talked about a pretty high probability of having a possible move to the upside in here based on an impulse move off the lows, some sort of a triangle of a corrective move sideways and another push to the upside. So we finally got that thing, and into our pro room, we were able to kind of take advantage of that. And I'll walk you through the trade to kind of see what we're doing and how we kind of look at the markets and how we trade some of these Elliott wave patterns. Even though the market is not giving you a whole lot of volatility in here to be able to enjoy larger swings, based on some of these patterns, you can still take advantage of the market. So overall, if this pattern still remains valid as a 1-2 and another 1-2 from these highs, then this third of a 30 year has to be pretty aggressive. Now, I'm not super happy with the way the move kind of started in here. I think it still looks sort of corrective, so it doesn't give me a lot of confidence that we're actually embarking in a third of a third. So I got some alternate counts that I'm looking at, and just kind of let the market guide me forward a little bit and just tell me what it's about to do up here. Because if this is an impulsive move and it's starting, then this larger third wave needs to start getting traction, and you need to have like a 5-wave pattern in here that just kind of pushes to the upside and takes up these highs. But so far that's not the case. So taking a look at our kind of regular counts, and this is the one that I present into our room every single day, and we kind of digest it. We go inside, in the smaller time frames, and we look at all the probabilities, and we're able to take advantage of some of them. But this is kind of my main working count. So as I have it in here, I have it as a 1, and in a wave 2 up here is an ABC. So this is my alternate bullish count, just like I've showed you before. It doesn't necessarily have to be a 1, 2, 1, 2, but just a simple 1, 2 of those March lows. And if that's the case, then we got to get some kind of attraction in here to this being a wave 1, maybe a very simple ABC in here for a second wave with a failed C wave. That's another 1, that's another 2. We're doing a 3, maybe a 4, and a 5 in here to build the case for a larger advance, all right? So that's why I have this as an alternate second wave. Now, if I'm wrong and that's not bullish, I'm going back to kind of my primary interpretation, right? But I'm just waiting for the market to guide me a little bit. So, and that says that this is actually a wave W. So you're coming from this highs in 3 waves, ABC for a W. And since then, we've done this A wave, we've done the triangle in B, and we have completed this wave C advance. And since this highs, we're looking now for a much larger decline to the downside. If this X wave top was found, right, or this is a flat for whatever reason, you have a 3 wave in A, 3 wave up in B, and then you're moving lower in a wave C, then you got to start to get going. The problem is with a flat scenario is we haven't reached the minimum requirements for a flat, which would be, at least 90% retracement of this entire decline. So for right now, I kind of tend to favor it as a WXY, but if it develops, more in a 5-wave structure, then we'll have to kind of, change the labeling. So looking at this thing, kind of coming from this B wave up in here into the C, what's happening next? And let me kind of, show you how we trade this lag, just so I give you a clue about how you're going to be able to do this on your own if you see triangles on the chart. So I'm going to go in here and I'll show you. So we've kind of, this was one of the charts that I posted into the Pro Room where we were looking at this developing move as a triangle for quite a while. And, we kind of patiently waited for it to develop, right? Because you don't know if it's going to be a triangle or not until you start to have more of a, so for example, if you analyze the market from here to the left, you have no indication that this is going to be a triangle, because you can have, this can be a wave 1, and this can be a wave A, B, and then you can get a C wave. I talked about it in the previous video, and it can be a second wave, and you can push up higher. So you kind of have to wait to see how the market develops. So we've seen a triangle, and then the rules that we follow when we trade triangles, it's very simple. We try to take a long trade based on a D wave breakout, and this is exactly what we did. So the moment the market broke about this V wave, we made an entry up here in 10,810. Then our next entry with more confirmation is the moment the market breaks above 10,950. Right, so we kind of waited, the market kind of pushed up higher and then consolidated lower. We did not take the trade on this pullback, but we did enter another position the moment we break above this B wave. So that kind of gave me a 50% entry up here and another 50% up on the break of this B wave. And based on this pattern, we targeted the top of the C wave, which we were looking at as almost an equality with this wave A for a target, or a completed 5-wave pattern from these lows. Right, so I'll show you the next chart and see kind of how the trade developed, and you will see that we've kind of gone all the way up there, and with a slightly move up higher in here, I think we tagged the top of this trend line. We were able to take 25% of our profits into this first target zone, and then we were waiting for the market to push a little bit higher here into 11,750 to 11,800. That move never really came that close to the target. It kind of stopped at about 11,725. And then since then, the market kind of pulled back, and we were thinking it's possible a 4th wave. But the moment we saw that the move extends a little bit more, I closed the trade back into these levels, about 11,380 for the remaining of 75% of the trade. And now we're flat on the market, and we're waiting for the next patterns. But this was a very simple example of how you can trade a bullish move to the upside by recognizing Elliott wave patterns. Right now, very simple, this triangle could have broken to the downside, and then you would have followed the other procedure, where if this was going to be a wave A, this would have been a B, C, D, and E. Yes, A, B, C, D, E. I'm sorry, I'm wrong there. So you have to start your count basically from here, right? So this was a wave A decline, and this was a B to the downside with the break lower. There would have been an A, B, C, all right? And if the market would have pulled lower here and break below this level, then you would have entered into a short position. If you break below this level, you enter into a short position again, and then you fully enjoy a move that would pretty much correspond with this leg back here all the way to the downside. So that's kind of how I would have traded a triangle if it would have broken to the downside. All right, I will play you now a small video from this morning's video chart review into our pro room, where I take a look at the smaller time frame into Bitcoin and what kind of what possibilities we have in Bitcoin based on a smaller time frame. So I'm going to play that, and then I'm going to take a look at the Ethereum. So here it is. Take a look at our counts here. So I'm just going to start with the 45-minute chart on here and just kind of looking from the end of this triangle. So we identified the end of this. We traded up here. We were able to kind of get out of positions up into these levels around 11,300, 380, whatever. And I kind of spend a little time looking at this as having a completed move from the lows. And we were waiting for a fourth wave here to possibly push one more push up higher in the fifth, but the moment I saw that this thing extends and we're starting to fail, up into these levels, I was like, I don't think that this move in here belongs in any way to this pattern. So if it doesn't belong to that pattern, that means that this pattern is complete, right? So now if it's complete, you got to count it complete. And since you don't have overlap in here, right, that means it's an impulsive move. It's a motive wave. And that means that's a 1. So you have a 1, small, 2, 3, 4, and 5. So that's a clean move in here. And now I think the part that kind of tricked me into this third wave was the fact there was a very small wave 2 in here. And this is your second. And then you have your 1 and your 2 in there. 1, 2, 3, 4, and 5. All right, so that's our third. Now this is our fourth, which matches the second, and that's your fifth, and you're done. So that's what I think, that this either C wave or a wave 1, as I have it here per alternate, it's complete, and now we're doing a pullback lower. Now we've only kind of pulled back about 38% so far, and that's a little shallow for me. But the pattern could be complete because you have an A, B, C, A, B, C for X, and another A, B, and C because we made a new low. So that's possible, or that's a 1 of C, and then you go 1, 2, 3, 4, and 5, and then you complete it, okay? And then you go back up higher. So that's why I'm not eager to take a long position or to re-enter this market to the long side, possibly for a shorter term trade. If I get some indication that we're getting up here into the 618, possibly here between 50 and 618, if this pattern starts to look complete, then I might entertain the possibility of a move higher. Now the problem is that the only way you can count that at this point, or at least that's what I have, it's a 1 and a 2, right? So that's a pullback in the wave 2, which means that if I switch from a 45-minute to a 3-hour chart, what you have is you have a series of impulsive moves, and that's a little stretched. So again, I could go to the blue count and show you, but basically, right, that's our 1. Then you have your ABC here in 2, right? So that's a 1, that's an A, B, and a very awkward C wave in here. I've talked about this, or this B finishes up there, right? That's this whole thing here, it's a B, and that's a C, ABC for 2. But now, yeah, I mean, you can still go in a 1 and a 2, right in there, right, like that, and that's your third. So 1, 2, 3, 4, and 5. So that's possible under the bullish alternate, right? So 1, again, ABC for 2, right, and that's another 1, that's another 2, 1, 2, 1, 2, 3, 4, 5. So that's kind of, you stay bullish. So either this is a fourth if this count is bullish, or it's a second. But if it's a second, I need to have a 1, 2, 1, 2. So it would be something like this. You would have it, and just kind of stay with me a little bit here. But so 1, 2, right, and now you have another 1, 2 in here, okay, and then you're breaking up higher, and you kind of have to make this in a 1, 2, 3, 4, and 5. But then you run into issues in this third wave. So the bottom line is that this move is correct. Okay, we'll see what happens to it. If it's a move, if this wave C, it's complete. up into these levels. Okay, and then you have your A, you have your B, and then we have our C. That means that this pattern is done. Now, if it's done in an ABC, either we're doing an X wave lower, right, and then we're pushing up higher here for whatever. Maybe it's going to be a larger flat, right? Because this whole thing could be a W. Think about it that way. ABC for a W, some kind of an X wave in here to the bottom of the strand line, and then another ABC up, okay? And that becomes 3, okay, 3 WXY in here, right, for a flat, and then you break lower. So that's another possibility. But what I'm saying is this is not impulsive to tell me that this is a 1, to the downside here, that's a 2, you're going to get a 3, a 4, and a 5, and move to new lows and consider this wave done. So I got some issues here. I got some issues with the overall thing because, if this move was done in a wave C, I would have liked to see more of an impulsive move clearly to the downside, followed by a 2-wave pullback, and then start to attack the trend line. So, there could be some clues here that this market might try to make new highs, okay, and attack the 1267 yet again. So that's kind of where I'm going with it. And I hope I gave you enough of a context in here to make some decisions, on some shorter-term trades if you want. But for right now, I'm going to continue to watch it. So that's on Bitcoin. All right, so kind of going back now to the Ethereum, guys, and looking at the blue count. So if you remember from a couple of weeks ago, we were taking a look at this and saying, well, if we've hit a major second wave low, we're still looking for Ethereum to push much, much higher. The problem we have is that we have sold off here in a pretty impulsive manner here in this wave. It could be a possible A wave, and they haven't had any continuation lower just yet. So following an impulsive decline in a wave A, we're looking for another impulse in a wave C. And for right now, it seems that the market is still kind of corrective and possibly doing this B wave. And we're trying to kind of get our way up higher here towards the 618 retracement of this whole drop in this A wave. And we'll see what happens to the market from those levels. I have another count. So Ethereum basically overall, it's not as, as clean and as likable, I think, as the charts in Bitcoin are, because, Ethereum still points in here that it could be moving to the downside. So I don't have a high degree of confidence. I don't think the triangle, for example, in Ethereum is as clear as it is in Bitcoin. If you were to have some kind of an A wave in here and maybe, a very A, B, C, D, like a triangle back in here, possible with the C wave that's either in progress or finished up here into the 618, and then you're moving lower. But also, this whole thing could be another whole triangle in its own. So if I go and I take a look at the 12-hour chart and I kind of start my count from these lows, you can look at this as being a wave 1, a wave 2, 1, 2, 3, 4, 5, 4, 3, and then still this could be a triangle in a fourth wave, right? And this is the decline, although quite impulsive, but you can have this as an A, you can have B, C, fourth wave, and we're actually, this is a 1 and that's a 2, and we're pushing higher here in this fifth wave. So it's a totally viable interpretation where actually Ethereum is still working in a fourth wave, kind of compared with something back in here, and we're still doing a new high before we correct lower. But I don't have a high degree of confidence in any of these counts. I'm just kind of, let Ethereum breathe a little bit. I mean, if I go on a smaller time frame, if you look at the move off the lows here, it is impulsive. I mean, you can look at this thing as being a 1, 2, 3, 4, and 5. So if that's an impulsive move off the lows, then my confidence is still to the upside. So just on a very short C wave, just like I have in Bitcoin, right? If that's a B, that's an A, that's a B, and then that's a C, you have to impulsively move to the downside and take these levels, right? If this doesn't happen, that means that this thing, it's impulsive to the upside, that's corrective, and you're going up higher. So I think actually this is a pretty good setup. I think, from what I see up here, Ethereum, has a higher chance of actually moving up than moving down. Even on a shorter frame, and if it develops into something bigger, so if this is a 1, 2, and then you're getting a larger 3, 4, and 5, then we know, then more than likely these highs are going to be taken out, and you're actually, doing a much, much higher move. So, kind of stay tuned. The Do I have any other accounts in Ethereum? I don't think so. So, you know, I'll just kind of leave it at that, guys. And I want to quickly, before you go, don't forget, please, to sign up to the channel and hit the notification bell and leave any comments, any suggestions you have for future videos. I also want to quickly show you, you know, what we're doing into the Elliott Cafe. This is our main menu. So you get market commentary, intraday charts, updates, videos. You know, we do live trades. I showed you. We have a chart room where we do, you know, discussions, and we have, you know, I can show you any chart you want upon request, you know, and I offer a lot of information up into that space. And also, you know, we have the course that comes free with the 3-month subscription, and you know, these are the chapters, and you know, a lot of people took it and they're really happy with it. You know, you learn a lot just by kind of going through this. It's a kind of fast course to learn, but it goes into a lot of details as well. I mean, I'm talking almost an hour about just fibs and ratios and a lot of practical tools, you know, combinations. I mean, everything gets in here that you need to know to get you going. And then, you know, with the 3-month subscription, you know, paying attention to the trades that I take and the videos that I do, it's, you know, I think it's a no-brainer, and you can learn a lot and just kind of speed your learning process into the Elliott way. But anyway, thanks again for you know, watching this, and I'll see you guys again in a couple of weeks. Thanks. Bye-bye.